Big tech collapsed midweek, and then roared back on Friday. And the trigger? Jerome Powell. Let's break it down. Monday started strong. The broader market looked like it wanted to rally. But by Tuesday and Wednesday, big tech hit a wall. Tesla and Amazon dipped below their 50-day moving averages. Netflix broke below and stayed weak. Meta and Microsoft fell right to the line. Even the Nasdaq equal weight fell under pressure. Meanwhile, the S&P 500 held up better, an early sign the damage might be temporary. For momentum traders, this was classic washout action. A sharp sell-off that shakes out weaker holders. I even got stopped out of some positions and took profits and some losses. That's part of the game. Big players often buy those dips at a discount. At this point, markets were bracing for one thing: Powell's Jackson Hole speech. On Friday, Fed Chair Jerome Powell dropped the hint traders were waiting for. He said the risks in the economy have shifted, and that rate cuts could be on the way. Not guaranteed, not timed, but enough to send stocks flying. The market heard dovish and instantly flipped bullish. And what a rally. Tesla and Amazon ripped higher, each up about 6%. Google jumped 3% and is back on track toward all-time highs. The S&P 500 climbed more than 1%. In crypto, Ethereum exploded, up 14% on Thursday, pushing back toward its highs. Bitcoin didn't join the party. It's consolidating around 112K, stuck in a range for now. So what's the takeaway? The rally is still alive. That midweek drop? A shakeout. Friday's recovery? Proof that the bulls are still in control. For traders, the 50-day moving average remains the line to watch. And Powell's signal of possible rate cuts? That's the fuel this market was waiting for. Stay disciplined, stay nimble. This rally isn't over. And remember, dips aren't just scary, they're opportunities. Follow us and check us out on Substack. This is the PIM Trader.